So between the economy and markets, investors have undoubtedly felt like it's been a three-ring circus this year. We discuss, if we're in that circus, which performer should we be? So whether it's geopolitics, domestic elections, the economy with inflation, the markets with their drawdowns and volatility, life has certainly felt like a circus for most of this year. Who are we going to be though? If we're going to be a performer, if we're going to get in that right mindset, have that correct perspective, really where should we focus our time? Is it on developing skills that can actually be of help? Or again, doing what so many investors do, which is scamming themselves by believing that they're capable of doing things they simply can't do, namely being able to predict the future. I do get the question though, whether it's these commentaries, looking at data, doing analysis, if you can't know what's going to happen, why do anything at all? And it's a great question. And I'm going to give you a couple short answers. But in general, we can sum it up with one word: balance. We want that data to help bring us balance. Balance in terms of our perspectives, balance in terms of our positioning. With respect to perspectives, there's three big points. Number one is just getting ready for what might lie ahead. Very few things can lead to bad decisions any more than surprises. And so how do we at least get ready, be able to look and say, we don't know exactly how this is all going to play out, but we do have an idea more times than not of what the range of possibilities are. Second is for understanding. Do we have an understanding of anything certainly that we might use to be making decisions so we don't fall prey to half-truths, whether that's from the media or someone trying to give us guidance, whether that's your colleague at the holiday party, not here at 10 Capital, of course, or your cousin at the family gathering, or some pundit trying to sell you a newsletter. We want to know the full story as best we can. Point number three is, and really the point to that analogy of being that high wire performer, keeping balanced in terms of our emotions, keeping those emotions under control. And you'll find if you're paying attention to these commentaries, more times than not, if we're tilting one way or another, it isn't necessarily to say this is what we believe, but rather to try to counterweight the totality of what's going on in the press or the general investor sentiment. So in early 2020, we came to you and said, hey, listen, we think you might want to lighten up a little bit. It had been a great run in the bull market coming out of that 2018 crash around Christmas time. And sentiment, as we highlighted in our commentaries, had reached 99 on CNN's Fear and Greed Index. Incredibly bullish. There wasn't a lot more room for things to look better. And of course, we had no idea that a global pandemic was around the corner. And yet, just a couple months later, in the midst of panic and despair and a lot of dark prognostications, we told you, lean in. That we had gone from 99 to probably sub 9 on that same index and said, this looks far more like opportunity than anything when it came to investing. And again, those things helped us make a lot of money on behalf of clients over the following 2 years as a consequence. Point being, when things get overwhelming one way or another, you need to find things that can help balance your emotions, balance that rod, keep you centered on the wire. Far more important than knowing, again, what is exactly going to play out or what exactly is the truth. Second is for positioning. A lot of critiques of the industry, hopefully not here of 10 Capital, is when you don't do anything. There's a fine line. You don't want to be trading all the time. That could be indicative of a bunch of bad decisions. On the other hand, doing nothing other than spouting cliches like stay the course, that's not enough, right? For us, as I've alluded to before, we are always trying to reposition and balance. After great runs in the stock market, we want to pull back a little bit. When things get super bearish, we want to lean in. The key difference is we're usually doing things that don't feel good. Most of us love to see those winners ride indefinitely. We hate those parts of our portfolio or those asset classes that haven't been performing well. And yet what we know is one of the best ways to not only moderate volatility, but to enhance returns over time is to regularly rebalance not only your perspective, but your portfolio. And that's certainly part of our process here at 10 Capital. So what is the current landscape right now? You can look at it, of course, fundamentally, quantitatively, and technically. From a fundamental perspective, this is usually a little bit of a longer look, longer time frame. Things are improving. If you look at inflation data this week, it came down. Supply chains continue to ease according to the New York Fed Supply Chain Index, and even wage growth is decelerating. And so those are all positive things that, again, confirm what we suspected would be the case, which is inflation would begin to moderate into year end. Powell obviously came out this week, confirmed that that's what they're seeing, led to that 3% pop in the markets on Wednesday. That's not the all clear. There are no all clears in markets, but again, it is a sign that, again, if you found yourself tilting a little bit too negatively, that, hey, there's some evidence we want to consider on the other side. Quantitatively, we think that sets up pretty well as well in the sense that people are so dang bearish still. So whether it's cash levels still at 20-year highs, the put-call ratio, people betting against the market being at levels usually commensurate with market lows, or the spread between bears and bulls continuing to be negative, i.e. bearish, for the 35th consecutive week. We think those all things set up from a contrarian perspective to tell you that, again, we're getting closer to the end than we are to the beginning. Lastly, is from a technical perspective, because you'll hear about this is usually for pretty short-term traders. It's not our style here at 10 Capital. But again, if we're preparing for what might lie ahead, we've had a pretty good little rip here off those October lows, still trying to butt up against that 200-day moving average. And so again, not that we're telling you should go out and try to trade any of this, but don't be surprised if we've got a little bit of volatility here over the next couple months. Pulling it all together, our bias, particularly as investors, is to believe whatever's been happening in the immediate past is going to happen into the indefinite future. That's usually not the case, which is why predicting markets is so difficult. But right now, that leads us generally as investors to be pretty bearish. That's why you see those bad sentiment readings. News cycles love to feed on the negativity. And yet, the thing we want to highlight this week is evidence, again, is beginning to mount that some of those things that have created this bear market that we're in are lifting, and again, will abate and hopefully let prices drift higher over the years ahead. At the end of the day, looking into that crystal ball, not going to help you. Keeping your eyes ahead and balanced on that wire is the key. And of course, what we're looking across that wire toward that we continue to stress will help motivate you to get through such tough times are your goals, are your dreams. It's your plan. Get that built. Keep your eyes steadily focused on that as opposed to everything to your left and to your right, and you'll reach your destination. Hope to see you next week, Thursday the 8th at our holiday party. But in any case, hope you have a wonderful weekend during this holiday season.